Hello! Now you might be keen to jump straight in with investing, and I'm here to tell you to maybe just press pause on that for a bit. You want to make sure that you have taken the right steps before you start investing. But if you're new, you might not know what those steps are. Luckily, in this video, I'm going to take you through some of those steps. So welcome to the Looking After Your Pennies YouTube channel. My name is Charlotte Jessup and I am a financial educator. I teach people how to budget, save money, make money, and grow their money through investing and pensions. Now, before I go much further, I just want to do a little bit of a disclaimer. So this is not financial advice. You can go off and completely ignore me, or you can go and get some financial advice from an independent financial advisor. What you need to do is do your own research about your personal situation. This video is purely educational, and it's just giving you some things to think about before you start your investing journey. You have to remember with investing as well that your money can go up, but it could also go down. So you need to make sure you are aware of the risks. And I'll talk a little bit more about this later on. So you might be feeling like you are ready to start investing, but I want you to think carefully about whether you feel fully prepared or whether you're just trying to jump on some sort of trend because you've seen it on TikTok or Twitter and you want to get involved in the action. Now, I'm not saying that you shouldn't want to get involved in that. I actually believe investing can be a really powerful tool. But we need to make sure that we're doing it from the right place and that we have the information to make some solid choices. So I'm going to guide you through 5 steps. The first one is getting to know your figures. Number 2 is making sure you have a backup plan. Number 3 is clearing the debts. Number 4 is learning the basics. And then number 5 is actually getting started. So let's jump straight in and have a look at that first one. So number 1 then, know your figures. So what do I mean by this? Well, I mean that you should know what's going on with your money before you think about investing. So this means you need to know what money you have coming in. So whether this is from a salary, from your side hustles, from multiple passive income streams, whatever your situation is, I want you to be confident that you know where that money is coming from. I also want you to be confident that you know where that money is going. So this means knowing what your bills are, what your outgoings are, what you spend on food, what you spend doing for fun, what you're spending on savings, what you're spending on your kids. All of these things are part of knowing your figures. Now, the reason that having this good foundation is key is because it allows you to understand how much space you have left to invest. Now, you might be thinking, like, yeah, I can probably afford, £100, £200 a month, but do you know that? That's the key. So it's about understanding the difference in what you have and what you think you have. And when we know what our figures are, we move into actually knowing what we have rather than thinking we know what we have. So you can do this through budgeting. Now, I have a free budgeting spreadsheet. It's super simple and the link is in the description. You can just go there, sign up, and it will get sent straight to your inbox. You can use that to keep track of the money that you have coming in, the money that you have going out, and to allocate some money towards your savings and investments. What could be a happy bonus from this is actually you realise that by maybe cutting back in a few areas, you could have even more money to save and invest. And wouldn't that be a great thing too? You might be thinking, oh, I've only got about £20 to invest per month. And then you actually look at your budget and realise that maybe you're overspending in a few areas. You can cut back in those and then have more room for your investments. Whatever your picture is, whatever your financial situation is, knowing your figures is a key component to good money management. Having a budget, creating a spending plan, knowing where you want your money to go and your money actually going there is just the absolute foundations. So I recommend that you do that as the very first thing now. And then we can look at what we can do with any excess or any leftovers that you might have and thinking about investing those. So number 2 then is to get a backup. So what I'm talking about here is having an emergency fund. So I've talked about emergency funds before, and so has everybody else that talks about money. It's this pot of money. It's a savings fund. It's a rainy day fund, whatever you want to call it. But it's there for when, times get bad financially. So this could be something as simple as your washing machine breaks and you need a new washing machine, or your car needs repairs. But it could also cover things such as you're out of work, or maybe you are just feeling overwhelmed in your current job and you just feel that you need to leave. Your emergency fund is there to back you up. Now, when we talk about this in context to investing, it actually has another level of purpose too. When we want to invest, we want to make sure that we're putting our money into investments for the long term. This is when they reduce their risk and they can become more profitable. I've done some previous videos that talks about things like the longer you leave your money in investments, the more likely you are to get a return, or the less likely you are to lose your money. So we want to make sure that we don't need to dip in to those investments. So having that emergency fund means that you can dip into that money, which is in a savings account or somewhere separately that you are just not investing. You can use that if there's an emergency rather than having to sell some of your investments. It also means that you're in a good position financially. If those things come up, you have the money there to deal with them. You're not then, trying to borrow money here or put money on credit cards and things like that to actually pay for these, what are fairly common occurrences, like your car needing a repair or your washing machine breaking. All of these things happen fairly often. By having that emergency fund, you are prepared to deal with those, and it's not going to interrupt your investing schedule, or it's not going to cause you to take on an additional financial risk in some way. Now, how much money do you need for an emergency fund? Now, there's a lot of talk in the personal finance space that £1,000 is a good starting figure. But this is good for people who are maybe in a position where they are working to pay off debt. It gives you a small buffer to handle those, standard kind of emergencies, like the washing machine, but it doesn't necessarily cover you if you were, say, out of work. So for people who are looking at maybe investing, which is a kind of higher level money management strategy, then it might be a good idea to have a slightly bigger emergency fund. Now, figures that are thrown about in this particular area say something between maybe 3 to 6 months of your monthly expenses. So let's say your monthly expenses come to £1,500. Well, 3 months worth of that would be £4,500. And if you want to take it to 6 months, then you're looking at £9,000. Essentially, what you want to do is be in a position where if you were, say, out of work and you had no money coming in, you'd want a window of time, 3 to 6 months, where you could use that emergency fund before you would need to have had another job or have another source of income coming in. So that's the point of your emergency fund. It's there to kind of pick you up if something goes wrong in your financial system, or that something bad happens. It's there to cover those bases. It also means that you will not need to be selling any of your investments, and that's key when we're looking at it in this context. So number 3 is to clear the debts. Now, you don't have to clear all your debts. What you need to focus on is maybe on those high interest debts. So let's say you've got a credit card with an APR of 29.9%. That is costing you a lot of money. Any money that you owe on that credit card is going to be costing you nearly 30% in interest per year. It's very unlikely that you're going to get that sort of return back investing in the stock market. So it's much more financially sensible to be clearing off those debts. It also puts you in a kind of safer, more secure mental space. Nobody wants the debt collectors knocking on their door and threatening to take their home and their stuff. So by clearing those debts, you're putting yourself at less financial risk. Now, there are some debts, for example, a mortgage, which, whilst it's still a debt, they have very low interest rates. So you could have an interest rate of, say, 1% on your mortgage. If you were then looking at maybe your mortgage versus investing in the stock market, so paying off your mortgage or investing in the stock market, then you could potentially see a greater return than that 1% of interest that you're paying on your mortgage. So that sort of low interest debt is not necessarily the priority. You don't need to pay that off necessarily. Do your own research, make your own decision about this before you start investing into the stock market. However, that expensive, that high interest debt, you should focus on clearing that first. Move any excess money that you have into that pot and let that be cleared before you think about investing seriously. Number 4 Learn the basics. I think learning on the job is a great idea. I think I'm a big believer that we should actually take action. You know, there's only so much reading, there's only so many YouTube videos that you can watch before you should actually take the action. However, you do need to know the basics. You need to know some basics around how the stock market works, the different platforms that are available, what things you need to look out for, and some of the jargon around this. If you want to take this a little bit further, then I have a beginner's investing course. It's called Investing Confidence, and you can get access to it through my membership. It's just £12 a month at the time of recording this video. It might have gone up, but if you're watching this, as soon as it comes out, get your membership to the Money Nook for just £12. And within that, you'll get access to Investing Confidence. It will talk about the jargon, the ins and outs of investing, the different types of accounts, and will guide you through to that first investment. There's also a whole lot more involved in it too, as well as some workshops, another course, and an exclusive community where we support you to help achieve your financial goals. So finally, number 5 is to just start. Like I said, we can spend a whole lot of time reading books, watching videos, and not actually take the steps we need to take, which is just getting started. It can be opening that account. It can be downloading that investment platform app. All of these things are just the steps you need to take to start getting investing. Now, you may be thinking, well, you know, Charlotte, I need to focus on paying off my debts and things like that at this stage. So I'm not really yet ready to invest. And that is okay. If that is your priority, you've seen the steps. I've not made this video pointlessly just to tell you to go ahead and do it anyway. But maybe you could think about investing with just £1. There are some investment platforms out there that allow you to just start investing with £1 and then you can learn as you go. Limited risk, because you know, it's a quid. If you can afford a quid, if you can afford to lend a quid to a mate, then you've probably got a quid to spend on investing. There are also some apps which give free shares. So you invest £1 or £2 and then you get a free share. And some of those are linked in the description as well. Once you've made that account, once you've put somebody in it, you will learn so much more about how the stock market and your investments will be trying to grow. You get to see the graphs, you get to see how the platforms work, and you will learn a lot about yourself and your risk levels and what you are prepared to do to build your wealth going forwards. So there you have it. That's my video all about the steps you need to take before you start investing. And I hope it's given you some things to think about. Yes, you might have some preliminary work to do around budgeting and sorting out your debts and building an emergency fund, but also there is a lot that you can do to take steps on your investment journey. So learning about investing, you can do that whilst you're paying off debt. You could even just make that first step, put that first £1 to £5 into investments whilst you're still building your emergency fund. As long as you've got like a few quid to spend, then it probably won't hurt. But like I say, there are risks involved. You could lose that money. Money can go up, it can go down. So make sure you don't do anything that you're not in a position to lose. Don't forget to hit that subscribe button so you can catch my future videos. I do a couple every week, so there'll be one out in another couple of days, and I would love for you to come along, come back to my channel and watch that video. But if that is too long for you to wait, then you can catch me on my other social media channels. They are all on the screen now, or you can check out the links in the description to take you straight there. Thank you so much for watching this video. Please feel free to leave me a comment, let me know what you think, let me know if there is something that you think I should add to this list and I can make a video about that in the future. Thanks for watching, bye!